I'm Sarah Borkson-Keto with NAREITsREIT.com, and welcome to Quick Study, a monthly review of REIT market developments. I'm joined today by Brad Case, NAREIT's Senior Vice President for Research and Industry Information. So Brad, we've had a bit of a volatile market so far this year. How did REITs perform in October?
The last bout of volatility in the market was really in late August and early September, and what's interesting about that is that it really affected large cap companies, not REITs. Companies really because they had a lot of exposure to non-U.S. market developments, and that's what investors were concerned about back then. That volatility has largely subsided, but it's important to note that it didn't affect REITs that much. And so during October was really a good month for REIT investors. REIT investors saw their total returns up 6.14% on the month. Investors in equity REITs that own buildings actually saw total returns closer to 6.5%. Now that's not quite as good as those large cap companies that had been hit by that bout of volatility earlier in the year, but it is quite a bit better than the non-REIT companies in the stock market that are more similar to REITs in terms of market cap or in terms of a value focus. The small cap and mid cap value companies returned less than 6% on the month, so REITs really outdid that. I think what's really going on is that investors got some comfort level in October that the conditions are there for continued growth in commercial real estate returns going forward.
And what are the fundamentals that investors should be focusing on at this time?
Yeah, you know, what really differentiates the real estate market from the rest of the stock market is what's happening to construction. And what we saw during October was continued low construction, less than the norm that was prevailing before the liquidity crisis, and in fact less than what we saw for quite some time before that. So that sets the stage for continued growth in rents and continued growth in occupancy levels. One of the macroeconomic indicators that came out during October was non-residential investment, and that really took a dive. But if you look at that number a little bit more closely, what it was reflecting was a reduction in activity in the oil and gas, the energy sector. And if you ignore that part of it and look at the part of non-residential investment that really has to do with real estate investment, it didn't take a dive. So we're seeing strength in real estate fundamentals. We're seeing continued growth in the REIT accounting measures of earnings, funds from operations, net operating income at the property level. So we're seeing continued very strong growth in the real estate fundamentals that support property valuations.
And were there any particular sectors in October that stood out?
Oh, sure. The infrastructure sector of the market, for example, showed returns of nearly 13% just during the month of October. There were a couple of other quite strong segments of the market. Industrial REITs were up by more than 9%. Retail REITs were up by more than 9%. In fact, REITs that hold regional mall properties were up by nearly 10%. But even if you look at the rest of the market, it was really a fairly strong month for the entire real estate market, and that fits with the real estate market fundamentals. For example, the lodging segment slightly underperformed the rest of the REIT market. So did the timber REIT segment. But what's important to note is that those REITs have been laggards in the earlier part of the year. So this is really bringing them back up to where the rest of the industry was. In fact, there was only one slice of the real estate market that went down during the month of October, and that was healthcare REITs. But it was really a very strong month for REITs as a whole. And as I said, that reflects the underlying demand and supply fundamentals, which I think continue to be in an imbalance that works to investors' favor and are likely to continue doing that for some time into the future.
Thanks very much, Brad.
Oh, it's a pleasure.
And for more news and analysis on all things REIT, be sure to visit REIT.com.